You've got your wallet, but now how do you actually buy or sell crypto? Where do millions of people trade Bitcoin, Ethereum, and thousands of other coins every single day? Welcome to the world of crypto exchanges, the bustling marketplaces of the digital economy. But here's the catch. Not all of them are created equal, and choosing the wrong one could cost you everything. You're watching Factsralogy, where curiosity meets reality. Just a quick reminder, this video is for educational purposes only and is not financial advice. So what exactly is a crypto exchange? Think of it like a stock market, but for cryptocurrencies. It's a digital platform where people can buy, sell, and trade. The exchange connects buyers with sellers and helps set prices based on supply and demand, a core concept known as liquidity. The more traders and volume an exchange has, the more liquid it becomes. This means you get faster trades and more stable, predictable prices. Most beginners start their journey with centralized exchanges, or CEX, like Binance, Coinbase, or Kraken. They work a lot like your online bank. You create an account, deposit money, and verify your identity, a process called KYC, or Know Your Customer. Once that's done, you're ready to start trading. These platforms are generally very easy to use and offer high liquidity. However, there's a big trade-off. They hold your funds for you. This means if the exchange gets hacked or shuts down, you could lose access to your crypto. Think of it as parking your car in someone else's garage. It's convenient, but ultimately it's not under your complete control. Then, to solve that problem, came decentralized exchanges, or DEXs, like Uniswap and PancaSwap. These platforms let you trade directly from your own personal wallet. There's no middleman, no account creation, and no KYC. Everything is automated and runs on the blockchain through smart contracts. With a DEX, you always stay in control of your funds, but this freedom comes with responsibility. Trades can sometimes be slower, transaction fees can be higher, and scams are more common if you're not careful. It's full freedom, but you're the one in charge of your own security. Now let's dive into the heart of trading, liquidity and order types. As we mentioned, liquidity is the amount of money flowing through an exchange, ready to buy or sell coins. More liquidity means smoother trades and less price slippage, that ease when the price you get is different from the price you expected. When you trade, you'll mainly use two types of orders. First is a market order. This lets you buy or sell instantly at the current market price. It's fast, but sometimes you might pay a little more than you wanted. The second is a limit order. Here you set your own price and wait for the market to match it. It's slower, but it gives you much more control over what you pay. Smart traders often use a mix of both to manage their risk effectively. Whether you decide to trade on a CEX or a DEX, safety must always come first. Here are a few essential rules to live by. First, only use the official exchange websites or apps downloaded from trusted sources. Second, always enable two-factor authentication, or 2FA, for an extra layer of security on your account. Third, avoid clicking on random links or falling for fake airdrop giveaways. They are almost always scams. Fourth, and this is a big one, don't leave large amounts of crypto sitting on an exchange. It's much safer to move them to your personal hardware or software wallet. And finally, always double check wallet addresses before sending any funds. Remember, once a transaction is confirmed on the blockchain, there is no undo button. You'll often hear the term KYC, which stands for Know Your Customer. This is the process exchanges use to comply with laws and prevent things like money laundering and fraud. It's why SEX asks for your ID. Some users prefer the privacy of DEXs because they don't require KYC. Others feel more secure using regulated SEX, knowing there are protections in place. Both sides have their pros and cons. It's a classic debate of privacy versus protection, freedom versus regulation. The key is to understand these differences and choose the platform that best fits your own comfort level and financial goals. In the end, crypto exchanges are the essential bridges connecting traditional money to the new digital world. They open up incredible opportunities, but they also come with risks. Use them wisely, trade safely, and always strive to keep control of your own assets. This is Factsralogy, where curiosity meets reality. Thanks for watching. If you found this video helpful, please give it a thumbs up and hit that subscribe button for more content just like this. See you in the next one.